How have all these tariffs affected the real estate market? Well, let's dive in. I'm Jim with the Bishop team, your leading realtors here in Orange County, California, talking to you about the real estate market in South Orange County in April of 2025. Surprise, it still comes back to supply and demand. And we'll talk about effects on that in a little bit, but let's start with this. So, homes coming on the market. We're still down 26% from what came on the market back in 2019, but we're up 38% compared to last year. And if you look at the last 2 years, homes coming on the market in March was really low, and that was squelching supply. Here you look year to date, homes that came on the market as new supply, up 28% compared to 2019, so a very similar number to March, and then 34% more than last year, again a very similar number. So our trends are not having big shifts month to month, year over year. So if we look at the total supply, not just new homes on the market, but ones that have been on the market, we're still down 45% from 2019, but we're up 125% compared to last year. That means there's more than twice as many homes for sale compared to this time last year. So supply is rising as we look at getting into demand here in a second. This next slide is our inventory or supply trends as we look throughout the year. As you can see, that black line is coming up. It's much higher than the past couple of years, and it's increasing at a faster rate. Green, red, and gray, 22, 23, and 24, we're increasing at a slower rate than we are here in 2025. So we're finally getting some more inventory or supply on the market for buyers to look at, kind of normalizing the market. Now let's talk about demand, homes in escrow. If you look back in 2019, we had 45% more homes in escrow, so a lot more demand. And then now compared to 2024, we're only up 1%. Remember, supply was up, demand up 1% means demand is about the same while supply has gone up a lot. Keep that in mind. So this shows the trends, January, February, March, of homes in escrow. As you can see, our demand pretty much dead flat equal with the last couple of years. So January starts slow, picks up, but nowhere near the top line, which is 2019. So supply and demand, what has that done to sales? So in March, down 39% compared to 2019, demand's down. And even compared to last year, down 4%. So a few less sales in March compared to even last year. On this chart, you see year-to-date sales. So the first quarter, down 33% from 2019, up 1% year-to-date. So net, supply is up, demand is pretty much equal to last year. What's that done to pricing? We'll get that in a second. So this graph geeks out a little bit. It looks at the relationship of supply versus demand. 0 is if escrows and supply are the same, 100 homes for sale, 100 homes in escrow. As you can see, we were below that, super hot market, and in the parentheses, appreciation, even in the high 20 and 29% in 2021. Then the higher we go, the cooler the market is. The top line, which is 2019, which we're getting close to, you can see we had appreciation like 1%, and we are approaching that number. If we keep going at that rate, not only will we see appreciation shut down, but prices would go flat and potentially even drop a little bit. But keep in mind where that number is now, it's less than 1.5, so meaning there's not a ton of homes. There's still like 2 months supply of homes or less depending on your city, maybe a little bit more, but that's still not to the point where we're gonna see prices dropping. For those of you who are waiting for that, probably not a great strategy based on the dynamics of supply and demand. So here's our nemesis, interest rates. If you can look a year ago, we were a hair over 7%. When you round off, it comes out to 7%. And right now we're a hair under 7%. When you round off, it goes up to 7%, but still pretty close. And that's what's keeping a damper on the market. If we can get interest rates down, that would spur buyer activity as affordability becomes easier to budget for. This is what we've seen in pricing for South Orange County. This is dollar per square foot. And you can see in the last year, we're up about 8%. And in fact, we've hit the peak, that's the high point, for all of South Orange County. Each city's a little bit different, but in general, on average, dollar per square foot, we're at the highest point ever. So that takes us kind of back to the beginning. If supply is up and demand is the same and interest rates are still high, year to date right now we're up 4% from January. So a little over 1% a month, but that's gonna taper off. So look for prices to remain stable. Good homes are still gonna sell at a premium. So good homes that don't show as well as supply goes up will not sell for as much. Condition matters. It's not just location, condition, especially as South Orange County is getting a little bit older, not compared to the East Coast, but you have homes that are 20, 30, 40, 50 years old. They haven't been touched in decades. They're not gonna sell for as much. As tariffs come into play, they could affect the building materials themselves. Now, we saw tremendous inflation during COVID as the lumber index went from 400 to 1600. That's a fourfold increase. Probably won't see as dramatic of an impact as some materials. So we don't expect that to crash the market, but you need to be strategic and plan ahead. If you're thinking about doing work around the house, not only buying or selling, but upgrading, give us a call. We can help you navigate with that as well. And if you want to do it, hey, you know, I'm going to sell in 2 years, but I want to do my kitchen now, bathrooms, whatever would make your home more appealing to you to stay in it, give us a call. We can help you navigate that. In the meantime, any questions about real estate, give us a call. I'm Jim with the Bishop team, your leading realtors here in Orange County, California.